so it's great to be back again here today with Momentum Mortgages. Steve, how are you?
Very good, thank you.
Good to see you.
You
I'm back obviously for the November update on mortgages. Last time I spoke to you, the markets were going pretty crazy. We were seeing some absolutely obscene mortgage rates in the market. I think a lot of us were incredibly concerned. 1 month on, things have calmed down a little bit, but we have recently had another base rate increase. That's something that I wanted to talk to you about today. How have things been over the last month, Steve?
Yeah, they've been pretty chaotic, let's just say that.
Yeah.
But the base rate rise is something that we kind of expected, and it's brought probably some surprising results that people maybe wouldn't have perhaps anticipated.
Right, okay. In what way?
I think generally when the base rate goes up, a lot of people kind of expect that to reflect in where the fixed rates are and what they come out in the market.
Yeah.
But actually that's kind of not really happened.
Right.
So the base rate's gone up, but fixed rates have actually gone down.
Right, okay, which is great news. Absolutely brilliant news. So why is that?
Yeah, good question. It's because back when we spoke a month ago,
Yeah.
all the lenders pulled all of their products,
Yeah.
and they had to reprice because that mini budget came out. That then sent the swap rates rising very drastically,
Yeah.
which meant that the markets were kind of expecting the base rate to increase considerably,
Yeah.
because the Bank of England would try and combat inflation,
Yeah.
which would have gone up even more as a result of the mini budget and what they put in place.
Yeah, okay.
Which meant that fixed rates then went up a lot. They had to reprice them with that in mind. So they built in quite a large cushion for themselves with the anticipation that rates would go up much more than previously they'd expected for next year. Now, of course, that didn't happen because they pulled all the mini budget back, which meant that the expectation of inflation then went down, and while the Bank of England did increase their base rate, they gave a little bit of forward guidance that the base rate perhaps wouldn't be going up as high as everybody thought it would.
Right, okay.
So that means that lenders now are then kind of pulling back a little bit,
Yeah.
because they thought, well, hang on a second, we raised these interest rates
Yeah.
because we were expecting, a more difficult year
Yeah.
next year, but actually that's not going to happen.
Well, at the time we had Liz Truss, didn't we? And we were on a different course in terms of where we were going to go, and now there's obviously been a big shift in terms of government policy as well, hasn't there? And I'm sure that's restored some confidence back into the markets too.
That's it, yeah, exactly, yeah. So that's all part of it.
Yeah.
So now, even though the base rate's gone up, we're actually seeing fixed rates slightly reducing a little bit, where they're kind of bringing in back into line with market.
It's crazy. It was a crazy period, one that I don't particularly want to go through again.
No.
And I know it's absolutely nuts for you too. I mean, like the crazy thing for me, like I've had some properties on, I've ran some open houses, still seeing like quite a healthy number of first time buyers, but I guess they were the ones that benefited the most out of the budget. Has that been reflected with yourselves and your business?
Yeah, well, one of the things that actually did result from the mini budget was the stamp duty changes. And in the housing market, I'd say that they were probably quite welcome changes.
Yeah.
The stamp duty hadn't been changed in such a long time.
Yeah.
And it's sometimes a very difficult barrier for people who are wanting to try and get on the housing market.
Yeah.
It's like, great, I've got the money, I've finally got the deposit together. Oh, hang on, I've got to pay this massive tax bill as well.
Yeah.
Actually, especially for first-time buyers, that stamp duty review is quite a welcome.
Yeah.
I think it was one of the only things that stayed from that mini budget. I think especially for first-time buyers in our area, where house prices are a little bit more, that nil rate ban that first-time buyers have now got has cut off a massive bill that they would have had to previously pay.
Well, I think the thing is, the feedback that I'm getting from, because obviously I talk to a lot of people when they're doing the viewings, is still that the private rental sector rents are just so high, and it's still, people are still determined to try and get onto the ladder and maybe just take advantage of that cuts that we had in the extra bit of cash and actually be able to have their own home, you know, still. So I know it's a big driver. And we were talking about, you know, obviously some changes in the market. You've seen a bit of an uplift for offset mortgages, right?
Yeah, we have actually, and it's been something that we've been introducing a little bit more often. And that's just because quite naturally the rise in interest rates have made them more viable as an option. So
what is an offset mortgage quickly?
So I'll start off with that. So an offset mortgage is where you have a linked savings account with your mortgage, and any of the money that you have in that savings account is then calculated, and they take that savings amount off of your interest calculation on your mortgage. So let's say you've got a 200 grand mortgage, you've got 100 grand in the offset savings account. They're only going to charge you interest on the remainder, the £100,000 that's left. So instead of charging you interest on 200,000, they're only charging you interest on 100,000. Now, before, when rates were on the floor and you're only paying 1.5%, what was the point in doing that?
Exactly.
But now, where rates are around 5%, that makes it more viable, more sensible option to go down.
I mean, I've got a renewal coming up next year. I have to say, even for me personally, that I find the offset mortgage quite attractive at the moment in terms of the proposition, just because it enables me to hold cash as well, but still get the benefit of that interest, you know, coming off my mortgage. It means I can use that liquid cash for something else if I kind of wanted to. So
that's the benefit of it, is because you get to use that money to reduce the interest that you pay on your mortgage, but you also have readily available access to that money. So if you needed to pull it out, you can do that. It's not a problem. Whereas if you overpay your mortgage, that's it. You can't get that money back.
No, exactly. It's locked up. It's gone. So
and the way that offset mortgages work is you can either reduce your monthly repayment from that money that you've got in there, or you can reduce the term. And reducing the term would mean that you drastically reduce the amount of interest you pay overall, and you can add to the offset savings account all the time as well. So
for sure.
The more that you add to it, the better, really.
Well, look, thanks so much for that. You know, there's some really sort of like good pieces of information there again from Steve. You know, I'll catch up with you next month again, see where we are, sort of like running into Christmas. I'm actually quite excited about, from on a personal level, about the market for January to April next year. That's my really sort of like busy period. Things do kind of calm down a little bit now, you know, as well. But if you do have a mortgage or you've got queries, Steve and the team here at Momentum Mortgages are great guys. They really do sort of like specialise in self-employed mortgages as well, which I think sometimes can be quite tricky side of the market to get into if you're self-employed. So any queries, give Steve a shout or into myself, and I'll get Steve to give you a call. So thanks again, Steve. Cheers.
Thanks for your time.
All right, brilliant.
Cheers.